Happy Monday to everyone. It is 8:01 Chicago time, 9:01 Eastern on the 26th of March, 2018. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market has ripped up in the overnight session. The S&P is up 30 points, 1.16%, 1.17%. The leader this morning is the NASDAQ, trading at 6651, up almost 100 points at 1.5%, followed by the Dow, which is up 287 points. The laggard today is the Japanese yen, the US dollar, the 10-year note, crude oil, and the bonds. So allocation clearly to risk this morning. Ooh, Mike is nutty. Okay, hang on. Distorted, I guess. Not sure if the cleaner. How about now? Looks like my cleaner, in her vigilant effort, changed the settings. How about now? Is this better? Oh, all right. Almost blew out your speakers this morning. Sorry about that. I don't make a habit of checking the mic settings. Anyway. All right. Bit lower, huh? All right. Okay, so lost my momentum here. So allocations to risk this morning. Big gap up inside of Friday's range. The news is pretty much all trade driven. There were a couple of news items that I posted. If you're a Convergent member, you got them in the room this morning. Looks like China is coming to the table with some concessions on semiconductor purchases, as well as the promise that the rules of foreign ownership are likely to be relaxed. Foreign ownership of securities companies likely to be relaxed by May, and the White House is saying they're continuing to engage with China, and so that's where we stand, and that's really the reason for the pop. Now, the market has not gotten back into in the S&P has not gotten back into the range of where we were on Thursday, but it's made quite a bit of headway, and it's in the heavy part of the profile. We'll look at that in a moment. Now, for a moment, let's take a look at what we expected on Friday. By the way, looking ahead for the week, we have quite a few numbers tomorrow, mostly Europe. Pretty light-ish Wednesday. We get core PCE, GDP, advanced goods, and wholesale inventories, as well as pending home sales. Nothing tremendous there. GDP, of course. Thursday, we have quite a few numbers as well, and then Friday's a holiday. I want to remind everyone that Friday is off. I just posted on Twitter and in the Convergent room the schedule. Pretty much all markets are off. It's one of those rare days where we actually can shut off during the week. It doesn't happen much in futures anymore. Happens much more in equities. Here's what we expected on Friday. Friday, the expectation. Now, when I was doing the Trader Bite on Friday, the open was around, the price at the time was around 26.45.50, as you see in the image in front of you, and I'm basically going off of that. Now, the actual open was around 26.51 or so. So we shifted everything up, but the plan was to push the overnight high and then to sell off and just drop right through the low. Why? Remember, we talked about Let me change that to white so you can tell what's new and what's old. Change it to white. We talked about how there was some heavy volume on the low with a weak low on Thursday's drop, and the expectation is we are likely to take out this low here. But first, we're looking for a responsive buying back up, and the limit of that would have been all the way up to 2663. 2663 expected to provide some heavy resistance, just simple price action resistance, not based on volume profiling, although you could see it's also value low here. And then I expected the market to drop off and go down to 2617. Of course, it's not really my intent to predict what the day's range is. It's really hard to tell what inventory there is that needs to be liquidated as the market falls. It ended up going a lot farther than that, but the main plan is to look for a place to sell somewhere around the overnight high, and then look for it to drop out of the range and to test lower into 2617 or so. This is what actually happened. I'll show you it on the 15 minutes. There we go. What actually happened is it opened at 2650 right up here, 2650, and pushed to 2656. Remember, my plan was 2645 open, push to 2651, so shift everything 5 points up. We got responsive first, and then we dropped right out of the range. Consolidate came right back in. This looked like it was done to the downside and it was ready to move up, but some heavy, just seemed like constant rhetoric and commentary on this trade stuff. Market could not sustain, and then just ended up rolling over. Now, I wasn't here for this. I did not see, fortunately I had to run down for some meetings, and I did not see how this traded, so I'm missing a piece of the puzzle here in terms of the quality of the trade as it took place. But clearly this bar here was pretty frantic. I can see it in the delta as well, and same with the closing bar. Quite a bit of volume here. The delta was at negative 87,000. We don't see that. We don't see that often. That it's the aggressor volume is that much higher on the sell side than the buy side. Remember, in this business, there are never more sellers than buyers. They're just more aggressive. And so this really looked legit. When we look at the extension of the IB low, we basically multiplied it about 4 times or 3 times. Looked very serious. So it's a trend day down with the point of control at the low, with some very, very sharp trading going on right in that 25.91 area, and we're above it. So this morning with this pop, again, news driven, we're basically set to trade news rather than structure this morning. So that's the first thing we need to be aware of, is that the market is trading news right now, and so it's what does that mean to us? It means OTF is present. In other words, the higher time frame is present, and so there's likely to be some driving behavior right at the open. As the equities kick in, we will likely see some adjusting in various revaluation in various portfolios and so on. So this kind of action today is likely to force bigger time frame institutional books and so on to adjust their valuation of the market and adjust their positions. So coming into today, we do have a gap up in range, a gap up in range. This is different than a gap out of range or an open out of range. We have a very recent auction that we can compare the action to. My suggestion to traders this morning would be for my for my own traders is to just chill for the first 15 minutes. Let the first 15 minutes go by. Judge the volume or participation during those 15 minutes and look at who has control. If in the first 15 minutes it floats around almost listless or like a rudderless raft, just back and forth, probably wise to just stand by. It is Monday. I know it's a short week, but it's Monday. You don't have to trade right away. You don't have to trade. There's going to be a trade at some point in the day. That's why we day trade. There's going to be a trade at some point in the day, but you don't have to make that commitment right at the open. So I advise you to just relax for the first 15 minutes. Look at the volume, the quality of the trade, and the context that's being built by the market generated information this morning, and then lean on your areas, stock zones, whatever you want to call it. Lean into those areas that where you've evaluated the market for engagement. That's really what the stock zones are. They're just areas. They are the areas that I intend to engage the market in based on various factors. Okay, so what are we looking at for today? We're probably stuck in Friday's range. I'm looking at an open right as it stands right here at 26.27. I'm looking at an open auction that will likely lose its bid early on, and I'm looking for a test down into the 26.15 zone, stock zone, before it balances. And then I'm looking for the market to start shifting back up. The target up above is 26.41. 26.41 brings us into alignment and into balance with where we were early on Friday. That's where the market accepted prices pretty well in a double distribution before it puked them out and drove to the close. Of course, on a Friday into a weekend, you start selling off and everybody wants out because they don't want to be stuck in a gap on Sunday. So that's what I'm targeting, 26.41 with a bounce from 26.15, 26.14 stock zone. That's my primary plan. Okay, I'm expecting the market to find a base and to start moving back up again. Why am I thinking that? You got to pay attention to the bigger trend, and the bigger trend is still up. Secondary, if we push higher right away and we encounter rejection in the 26.35, maybe even 26.41, and we roll over and we break the opening swing low, in other words, we start to come back through the open and break through, I expect that there will be a fair amount of selling coming into 26.15, and then a quick slip down into 26.03 to retest that century area. Excuse me. To retest that century area. This is the better trade for today, or the higher opportunity trade, I should say, for today. An attempt by buyers to squeeze and push up with the overnight trend that fails, but this does not fail until we get back through the open and we clearly are not able to regain or find buyers below the open. If we test the open and we pop back up and take out the high again, this is off. We're then looking at scenario number 4, which is a test back and forth and then a run to, believe it or not, a run to Friday's high at 26.58 and back on our way to 2700 at that point. But that's, and if it fails to push back up to take out this high after it takes out the low or the open, if it fails to do that, then there's going to be a fair amount of room to the downside, and 26.03 stock zone is probably in play. Okay, so those are the two main ideas, and I'll leave you with that. There's not much more to say. I want to remind you, as always, you've got to take whatever steps are necessary today to win the day. If you come in here and you don't win the day, in other words, even if you end up down, let's say you're just a struggling trader, and you're just constantly losing. Even if you're down, the minimum thing that you can take away is that you have practiced and conquered some issue with your trading. In other words, identify what it is, what errors, what problems you're having, an issue holding a trade, but conquer something so that you can win the day. If it's going to cost you a few $100s a day to do this, you might as well gain a skill, as opposed to those people who come in and just kind of float around, do whatever, almost like they're at a casino or it's an entertainment, and then they move on. And if that's your intent, hey, you're well off, and this is just your entertainment, great. But as a trader, time is of the essence here. The sooner you can get your edge to show up in your results, the more money you can make off of it in the long run, because your edge is being blunted by the market over time relentlessly. So losing day after day after day without moving the ball further down the field is pointless. So I'm here to remind you to do that. Just figure out what you need to conquer today and work towards it in a very focused and deliberate way. Good luck.